What happens when the code that runs our world moves faster than human thought? Welcome to the Digital Ghost. We're about to dissect a sequence of high-frequency commands that turned a moment of market volatility into a trillion-dollar collapse. Imagine this. Major stock indices are plummeting towards zero, and there's not a single piece of breaking news to explain why. For 20 terrifying minutes, the global financial system held its breath. This wasn't a human panic. This was something faster, something happening in the microseconds between the blink of an eye. This is the world of high-frequency trading and latency arbitrage, where algorithms fight for tiny advantages in the gaps between human perception and digital reality. The central mystery is why the circuit breakers, the safety nets designed to prevent exactly this kind of catastrophe, failed. It felt less like a glitch and more like a deliberate, targeted attack on the world's wealth. It all started with a single large sell order, a drop in the ocean, you might think. But this drop acted as a catalyst, awakening thousands of predatory algorithms. They entered a defensive loop, a deadly game of hot potato with massive volumes of stock. This created a phenomenon known as liquidity evaporation. The automated market makers, the very entities designed to provide stability, vanished precisely when they were needed most. When we look at the millisecond-level data, we can see the algorithms cross-referencing each other's panic, creating a self-fulfilling prophecy of total collapse. It was a feedback loop of pure digital destruction. This is all possible because of the shift from bustling trading floors to silent black box environments. Here, speed is the only thing that matters. Elite algorithms use sinister tactics like spoofing and layering to create false market signals, tricking other machines into a downward price spiral. And while these digital weapons evolved at light speed, the regulatory oversight of 2026 was moving at a crawl, completely unprepared for decentralized AI-driven trading clusters that answered to no one. The fallout was catastrophic. We saw what are called stub quotes, where shares in some of the world's biggest companies momentarily traded for just pennies. This triggered a tidal wave of automated stop-loss orders, wiping out the accounts of everyday retail investors. Imagine watching decades of your savings vanish in minutes, only to reappear later. The psychological damage was immense, shattering the illusion of a stable, trustworthy market. The contagion spread like a virus, bleeding into crypto markets and automated pension funds, exposing a hidden, fragile interconnectedness that no one had fully appreciated. So, where are we today? You might think we've learned our lesson. The chilling reality is that our current financial infrastructure is even more vulnerable than it was back then. We are handing more and more control to predictive AI and autonomous agents, but in doing so, we are losing our ability to pull the plug. When the next systemic failure begins, we may not have an off switch. The next trillion-dollar evaporation isn't a question of if, but when. We are living in an age of invisible digital warfare, and the battlefield is the global economy. Thanks for watching. And if you want to understand the fragile world we live in, make sure you subscribe.